Disclaimer: this is not financial advice. Always do your own due diligence before putting your money to work. With that out of the way, let's have some fun and enjoy the episode.
What's good, y'all? Welcome back to another episode of the Rich Off Gangs podcast. It's your boy CB checking back in with y'all. Happy Monday Mondays. This is episode 38. Hope y'all had a great weekend. Hope y'all are having a great start to your week. Without further ado, let's get right to it. Before we get started, I want to say a few things, man. Make sure you guys continue to have unwavering, unshakable confidence in yourself, in your plans, and the things you're doing each and every day. You can't allow noise and distractions and things that don't allow you to see the result derail you or take away from your confidence in the plan and the thing that you're doing working, because it's just simply that, a distraction. It's just simply that, an obstacle, something that's not meant to allow you to move forward, something that's not meant to allow you to help you get closer to your goal. So you have to keep that confidence in yourself, in your plans, and in the things you're doing to continue to push forward and continue to get closer and closer to that result that you're seeking. Today we're going to be talking about a lot of different things going on in the market, going on in the economy. Over this weekend, the market did see a pump up in the market and a gap up in the market on the ETFs and the individual companies. So let's talk about, first off, let's go to our investment tip of the week. Investment tip of the week. Make sure you guys always have, once again, an idea of what you're doing, a plan of what you're doing. You gotta go in this market. It's very easy to make money, but it's also very easy to lose money, especially if you're not using a plan and you're not sticking to something that gives you a structured way to approach the market. So if you're just getting in the market, click and buy, click and sell, click and buy, click and sell, click and buy, click and sell, most likely your account is down. You're not seeing consistent returns. You're not seeing a consistent result in the market. And that's simply due to the fact that you're not sticking to a plan, or you're not even trading a plan to begin with. So trading a plan is essential to your strategy. It's essential to your success. It's essential to your growth as a trader, as an investor. You got to have a plan of action, a plan of attack. How do you plan to approach this market? If you don't have a plan to approach in the market, then you're planning to fail. So you cannot plan to fail, and you have to have structure. Okay? A lot of successful businesses and companies are successful the way they are because they had structure. They had foundational way of routine, standard of procedure, SOP, to the way they show up every day, every week, every month, every year. They don't change anything for years. They update, they add, they tweak, but they don't change the core fundamental process. They keep the same things the same. It's just like basketball players sticking to the fundamental basics of layups, free throws, jump shots. Mastering those three things will allow you to be an effective basketball player. Mastering the fundamentals of defense will allow you to be a better basketball player. Same goes for football. Mastering the ability to be a quarterback allows you to be a great quarterback. Mastering the ability to run the ball allows you to be a great running back. Mastering the ability to catch the ball and make moves to get around the opponent and get to the goal allows you to be a better wide receiver, linebackers, whatever. You gotta have a plan of action. You gotta have a standard of procedure. You gotta have an operation and a structured way to approach whatever it is you're doing. And especially in the market, you have to have a plan. Because if you don't have a plan, you're going to fail 9 times out of 10. So let's talk about what took place over the market this weekend. We had a little bit of a gap up. The reason we had a gap up was because, once again, Trump announced a pause on the Iran attacks, war. And this is nothing new. This is a cycle that we've been seeing time and time again this year. Similar to last year with Liberation Day, with the inflation and the taxes on China and all the other countries. Trump has a system. Trump has a plan. Trump has a way of action and an approach that, if you pay attention to the patterns, you can see these things and execute on them and succeed. You just have to be in tune and align with what is taking place in the market. So if you took notice of the constant repetitive cycle that we see take place in the market, then you'll know how to execute and take advantage of the market's movement. But if you don't acknowledge or take advantage of these patterns, then you won't be able to take advantage of these market movements. And so a lot of times you see in the market, whenever these kind of headlines come out, it tends to move the market in a very aggressive way. We've seen the market move from 630 all the way up to 760 in the last 2 months, all due to news driven around earnings, driven around the war. And we're in a crazy time of investing. And so how can you as an investor capitalize off of this? Is, like I said, identifying the patterns. And then once you identify the patterns, you now utilize the patterns to your advantage. So you manipulate the patterns that are being displayed in front of you. You now acknowledge it, consume it, and apply it. Okay, cool. So I know that every week this certain headline comes out, or every other month this certain headline comes out. So cool, let me wait for that headline to come out. Once this headline comes out, I know that this reaction happens from this reaction is what's had from the market. So I know that every week or every month or every day this headline comes out at this time, and I know the market reacts in this way. Cool, I have a strategy and I have a plan now. Wait for this headline to come out, or wait for something aligned alongside these headlines to come out. Let the headline come out, let the market react, and let me take advantage of the market reacting. It's that simple. But you have to be in tune and align with the frequency and understanding what's taking place in front of you. Because if you're not on point, you can miss out on the opportunity. So you gotta align your frequency in order for you to capitalize off the opportunity. Now, how do you align yourself with the frequency? By keeping your frequency open, by keeping everything else clear, keeping your antennas clear. In order for Wi-Fi to work, in order for anything to be connected, you have to have clear skies, or something that's clear enough the path cannot be blocked. You have to be clear of all distraction, clear of all obstacles, in order for that connection to be strong. I hope y'all hear me. You have to have clear range view in order for your connection to be strong. And that applies to what we're doing in investing. You have to have a clear point of view, a clear outlook on what you're taking place in order for you to have a strong connection to the market and a strong understanding of what the market's doing when it comes to technical analysis. All right, so with the economy and with the market pushing up higher, what can take place this week? I talked about a little bit of my stock market recap predictions. If we reclaim 744 on SPY, we can see push higher into the 748 level. If we push above 748, we can see a push back into 752.5. Now, another thing to keep in mind that's going on this week is the Fed is going to be making a decision on whether or not they're going to be increasing or decreasing the rate hikes, or keeping it the same. Now, this takes place on Wednesday, so stay tuned for that. But there's talks of the rate hike being raised potentially, and then there's also talks of the rate hike just staying the same and it being possibly raised in September. My personal thoughts, I think the rate hikes won't change, and I think that if they do change, if they were to set change or go higher, I think they'll change in September. They'll push it back to a later time, just because I don't think that there's a lot of data around raising that makes sense for the rate hikes to be raised. Given the war we're still in and the jobless claims coming back lower than expected. So there's more people working. There's a lot of people in the economy, in the circulation, that are making money, and so I don't think there's a reason to lower rate hikes for that reason. Now, if there's a situation where debt. It's a tricky thing with interest rates, which is something I want to learn more about and do more research on myself. But if the debt continues to increase strongly, then I think that decreasing the rate hikes would make that worse. So that's another reason why I don't think it makes sense to raise the rate hikes. It's just it'll make the debt to inflation too volatile. It'll just make it run up even more, because now more people are going to go borrow money, more people are going to use this money that they're borrowing from the government, from the state, wherever, and it's just going to make the debt go up even more. So I don't think that makes sense, in my opinion. And those are the two reasons why I think that it won't go up. So outside of that, like I said, we also have mega cap tech companies' earnings reports this week. A lot of earnings reports reported this week. A few companies that I'm watching for earnings reports this week are Monday. Today we had nothing really important report other than APLD. That's a tech company, Applied Digital, which reports after close. On Tuesday we have PayPal in the morning, Boeing, Coca-Cola, UPS, Royal Caribbean, Sinclair. After close, we have Bloom Energy, Seagate, Enphase, Visa, Teradyne. We have Ford, which I don't think anybody cares about. On Wednesday morning, we have SoFi, ADP, P&G. After close, Wednesday, we have big boys, Microsoft, Meta, Robinhood, Qualcomm, ARM. Chipotle is also reporting. On Thursday morning, we have Visa, Valero, even Ferrari. Thursday afternoon, we have Apple, Amazon, Roblox, Reddit, Rivian. A lot of companies reporting this week. And then Friday, we close it out with a lot of oil and gas energy companies, ExxonMobil, we have a company, Moderna, Chevron. A lot of companies, major companies reporting this week. So this week is going to be a big week for this quarter. So keep that in mind going into this later half of the week. As you're day trading, be mindful of the trades you're taking, where you're trading, what's companies and sectors you're trading, because when you trade options specifically and you want to trade a certain company, like for example you want to trade Apple, but Apple's earnings is this week, you want to be mindful of the volatility, implied volatility on those contracts when you're buying and selling options, because those implied volatility contracts, the implied volatility is basically what they're expecting the movement of the stock to be. And so if the implied volatility is higher, let's say over 50%, over 60%, they're expecting very volatile moves. And so with them expecting very volatile moves, that'll decrease the amount of value these contracts have. This is Option Talk 101. If you guys want more tips and tricks about day trading and investing, make sure to click the link in the bio, www.continuebelief.com. I share a lot of free resources and tools, tips and tricks about how to day trade, how to get started investing, and so much more. So make sure you guys check out the link in the bio. Thank you guys so much. Make sure to leave a like and follow. And yeah, see you guys later. So you have to be mindful of the companies and stocks you're trading, because implied volatility can affect the value of those contracts depend upon the timing of when you're trading it. So if you're trying to trade Apple, like I said, this week, the likelihood of you getting a lot of value from those contracts is lower, because they have earnings on Thursday, which means their implied volatility is higher. So with them having higher implied volatility, the value of the contracts to move is going to be lower because of the implied volatility. So just be mindful of that when you're trading options. That's something that a lot of options traders don't know. Whenever they're in a stock, it might be moving up a lot, but the value of the contracts isn't moving up. So you're curious as to why the value of the contracts isn't moving up. It's because the Greeks are going against you. And the Greeks, that's a whole nother conversation, which we'll talk more about on Options Talk 101. But this is Option Talks 101. I want to talk to you guys more about things you guys need to know when trading, when investing, because these are things that retail investors don't know that they should know, because this is what hurts a lot of investors from being profitable. They'll just only know about 0 day to expire contracts and 1 day to expire contracts and only take those trades, but not even take into thought that there's a bigger machine playing against you. And so these are things that I learned on my journey that I want you guys to learn as well. And I plan to do more option talk one-on-one so you guys can see and understand what is taking place when you're taking these trades. If you guys like that, make sure to show some love and support so I can make sure I can understand and receive it and know that you guys like it, so we can move on with more information and data coming to you guys. Outside of that, man, those are the two major things happening this week, so just be mindful of that. I want to go over last week's best performing and worst performing sectors, so let's get over to that real quick. All right, for last week's top performing sectors, number 1, we have XLE Energy, up over 3.7%. Their top movers, ExxonMobil, Chevron, Conoco. Seeing that move that they had due to the Iran conflict allowed them to see this rate of return in the market. Really, really good return in the market. If you traded some XLE last week, shout out to y'all. Y'all did really well with that, I'm sure, because they ran up a lot. Moving on, we have real estate. Ticker symbol XLRE, seeing a 1.4% return in the week. Top movers being Welltower, Prologis, and Visi Properties. A lot of rotation coming in from tech, memory, and rotating into other sectors, and real estate seeming to be a benefactor. Real estate isn't really a sector that I watch heavily too much, and I really don't plan to watch more real estate. There's not a lot of real estate companies that I want to invest in on the stock market. I'll just much rather purchase the property. And let me know what you guys think. Do you guys think it's worth purchasing a real estate stock or buying a property? I just think that there's so many other better investments in the market, especially with tech, that you can see a better return on investment from rather than buying a real estate stock. So I just don't agree with buying a real estate stock. Now, if you're buying a, picks and shovels real estate stock, a stock that's fundamental to every, like infrastructure, stocks that are helping build and construct these homes, develop these homes, those kinds of stocks, material-wise, they're giving the materials, they're providing the labor, those kind of stocks, I'm not mad at. I think that they have a lot of value. I think they have a lot of growth because, more and more people want to build homes, and, the population will only increase. People want to keep building and living. People always have a place to live. People always want to live somewhere, so there's going to always be some kind of construction or development going on. So I think those are core fundamental parts of real estate that you can invest in, but I don't think that buying a real estate company that buys and sells real estate properties makes sense from a stock market perspective, in my opinion. But that's just my thoughts. Moving on to number 3, we have financials. Ticker symbol XLF, seeing a 0.1% return in the market. Didn't move too much, but the top movers, Amex, JP Morgan, and Goldman Sachs. Another rotation, strong rotation off of those companies, and I think that that's a better investment than buying into real estate. Banking services are vital to the U.S. economy, really any economy, but particularly U.S. economy, since we're in the U.S. stock market. And I just think that there's a lot of value had in the bank sector, especially in the top movers like Amex, like Visa, like MasterCard, like JP Morgan. So yeah, moving on to the worst performing sectors. Consumer discretionary being number 1, seeing a negative 5.2% return in the market. Ticker symbol XLY. The worst stocks that performed in this particular sector were Tesla, Amazon, and Booking Holdings. Tesla had missed their earnings report badly, and for that it came down pretty aggressively, seeing over a 17% drawdown week to week. Is Tesla worth buying? I don't think Tesla's I don't think Tesla's worth buying. And we're also seeing a drawdown in SpaceX as well. You know, SpaceX is finally dropped below the IPO price of 150. Now, as I've told you guys before, I was a strong believer in not buying it. Strong believer in not buying it prior to earnings. I still believe that it's not worth buying it until after 6 months. That was something that Ian from Earn Your Leisure mentioned not doing, and I've never really experienced purchasing and selling IPO stocks. Now, I did buy an IPO share of SpaceX early on in the IPO when it did IPO, just to see what it's like to, you know, be a part of that. And so it didn't run up, but now it's pulled back. It saw as high as 220, then from 220 it came all the way back down. Now it's sitting somewhere around 120, 115, something like that. And so do I think Tesla or SpaceX is worth buying? I don't think Tesla's worth buying at 300. I think it needs to come lower. I do think SpaceX is worth buying, but not at 120. I would rather it come down below 100 or close to 100. And I think that would be a decent price to get in at. It is just overvalued, you know, and that's the main concern around SpaceX, is that it's so overvalued, and you know there hasn't been really much of any data or any relevant information to go off of that gives you confidence to want to buy and hold this company as of right now. So it's still early, really, really early to the game. I just bought it just to kind of test it out, see how I felt about it. So I feel like if you guys want to get into SpaceX, you should wait after 6 months getting into SpaceX. As for Tesla, I think it's not a good buy until it gets lower, closer to 200, low 200s, mid 200s. So 250 to 200 would be the target prices I would say buy Tesla at. I just don't. It's doing too much transitioning, you know, with them trying to turn their vehicle production company into a AI robotics company. It's a lot of moving pieces around that. Then Elon being Elon and having all the things he has going on, it's just too much, for me at least. That's why I bought a few shares of SpaceX, and I want to buy more, but I want to wait for that to settle and then get more and get positioned into that company. So yeah, that was one of the main contributors to consumer discretionary having such a weak performance this week or last week. Moving on, we have communication services, ticker symbol XLC, seeing a negative 3.9% return. Their worst stocks performing being Alphabet, Meta, and Netflix. Google also had reported earnings. They had a good report, but their earnings call wasn't. They said some things that, you know, shareholders didn't like, so people took profits, people sold off, and that also affected Meta's movement as well. You know, anytime mega cap companies report earnings, it typically can have some spillage or some effectiveness to the other tech companies. You know, we see that happen a lot with semiconductors. You know, AMD, Nvidia, Avgo, whenever they report earnings, even Micron having the strongest impact on memory. Whenever they report earnings, you see a lot of times the other companies in that sector, same sector, get affected by the report that one company had. And that's simply due to the fact that all these companies are aligned and they all play a part in some way into the bigger picture of everything. So they will always have some impact on the other companies. It might be good, it might be bad. It's just a good thing to be mindful of when going into earnings season, that these companies all react based upon how the other company reports sometimes. So just be mindful of that. But yeah, the worst stocks performing in this one, as I said, Google, Meta, and Netflix. Netflix, I think, is a great buy. It is seeing a bit of a push off of that 65 level. This is retesting previous all-time highs. So this is something you guys want to be mindful of. When doing technical analysis and trading, you want to be mindful of your charts. You want to see you want to understand the charts and pay attention to the charts, especially in the larger time frames. I like to go back into larger time frames to look at the all-time high levels that were once a level, just to see if we ever get there again, because I think that's always a good place to buy a stock. So Netflix was one of those companies that did that recently. Another one is Bloom Energy. If you guys want to get into that before they report earnings tomorrow, I think that's a good buy as well. At this current price, it's down over 40%. That is always a good buy on my list of things to buy. It is still early. It has seen a really high run up this year, but I definitely think that it is something worth buying. But nonetheless, you guys want to use your higher time frames to chart and find those all-time high levels, because those are great levels to get in, especially if you see the level holding and it not failing and pushing back up. So Netflix is one of those companies that I bought recently after their earnings report. I bought soon after their earnings report, probably because it came down to 65. I bought it at 67, something like that, and then I'm holding. I'm holding for at least a year. I want to see where these go. They reached 110 earlier this year. They came back down. I think they can go back to 110 at least. I might take some profits there, but I think they can go to new all-time highs going into the next year or 2 years. So that's my thought process on Netflix. I do like Netflix a lot. And yeah, I think it's just a really beaten down stock that hasn't seen a lot of love this year, just simply due to the fact that memory's been running up, and once memory cools off, Netflix will be right there for people that want to get back in. Plus, they didn't follow through the Warner Brothers deal. I definitely think Netflix is a good buy. Even into the later end of this year, you can trade it from where it's at now, using 65 as stop loss, and then riding it all the way back up to 80, 90, 100, however long you plan to hold. It's up to you. Moving on, lastly, we have the consumer staples. Ticker symbol XOP seeing a negative 1.2% return in the market. Overall sector that just had poor performance. Wasn't really any laggers that stood out. Kraft, General Mills being some of the weaker ones, it looks like in this sector. But overall, this did have a 0.6% fall off impact for the S&P 500. So these are all your weak performing sectors. A lot of good bangers to look out for and put on your radar to purchase. Seeing the pullbacks it had, even with Tesla not being in the position to buy yet, is definitely worth looking at to keep in mind going forward. So yeah, with that being said, y'all, I hope y'all enjoyed this episode of the Rich All Gains podcast. This is episode 38. Thank you all for tuning in. God bless you all. I hope you all have an amazing rest of your week. I want to thank God for another day that was not promised. Thank Him for waking me up this morning. Thank Him for allowing me to see the beginning and forwardness of another week. I hope this is an abundant week, a blessed week, a disciplined week. Make sure to stick to your plan. Do not deviate from your plan, and do the things you said you were going to do. All right, it's your boy CB checking in with y'all. Love y'all. Appreciate y'all. See you guys next week. Peace.